Welcome back to High Net Worth Living. Today we're going deep into the investment strategies of billionaires and the ultra-wealthy, looking closely at how they build, manage, and grow their wealth. The top 1% have access to investment strategies that most people might not be familiar with, but understanding them could help you adopt similar principles in your own financial life. We'll cover what they invest in, the diversification strategies they use, and the unique ways they think about and manage risk. So if you want to learn to invest like a billionaire, you're in the right place. Who are the top 1%? First, let's define who the top 1% are. When we refer to the 1%, we're talking about the wealthiest individuals and families in the world. In the United States, for example, this group includes those with an annual income exceeding roughly $500,000, though the threshold changes depending on the country. The wealthiest among them, the billionaires, hold assets across diverse industries and sectors. This top tier of earners often have net worths that extend far beyond liquid cash. They have equity in companies, stakes in venture capital, substantial real estate holdings, luxury assets, and more. What truly distinguishes the 1% from the average investor is their approach to wealth. It's not just about increasing income, but preserving and growing wealth over generations. They think in terms of legacy, global influence, and strategic investments that protect and expand their portfolios. The mindset of the 1% investor. Before we dive into specific investment vehicles, let's look at the mindset that the top 1% bring to investing. The ultra-wealthy prioritize long-term planning, and they often make decisions based on macroeconomic trends, geopolitical events, and long-standing financial goals. The rich tend to think in terms of risk and return, not just for individual investments, but for their entire portfolio. They often have a specific philosophy that's tied to their values, risk tolerance, and goals. For instance, they might be very conservative with certain aspects of their portfolio, but willing to take bold, calculated risks in other areas. Wealthy investors generally strive for growth, security, tax efficiency, and an ability to weather downturns without significant impact on their lifestyle or legacy. Diversification. A core strategy, a fundamental pillar of investing. Like the top 1% is diversification, which is the practice of spreading investments across various asset classes to reduce risk. The wealthy typically diversify in a way that not only protects them from market volatility, but also positions them to take advantage of emerging opportunities. For billionaires, diversification goes beyond simply holding different stocks or bonds. It encompasses multiple asset classes. This might include traditional assets like stocks, bonds, and cash, but also alternatives such as real estate, private equity, venture capital, commodities, and even art or luxury assets. Let's go over some of these asset classes that the top 1% commonly invest in. Equity and stocks, a staple of wealth building. Equity investments are a staple of most portfolios among the wealthy. Billionaires often hold large positions in publicly traded companies, but they usually focus on blue-chip stocks, growth companies, and technology stocks, especially if they want capital appreciation. They also take an active approach to investing, which might mean having an advisory team, using advanced market data, or even influencing corporate decisions as major shareholders. Beyond public markets, they also invest in private companies. Private equity allows them to acquire significant ownership in businesses, which can yield high returns. This includes investing in companies before they go public, through angel investments or venture capital. This form of equity investment is a powerful way for the wealthy to increase their influence and grow their wealth faster than they could with traditional stocks alone. Real estate, more than just property. Real estate is a cornerstone of high net worth portfolios. For the wealthy, real estate is more than just owning a few homes or office buildings. It's a diversified strategy within itself. They invest in different types of real estate, including residential, commercial, industrial, and specialized properties like data centers or health facilities. Investing in real estate provides the ultra-wealthy with multiple benefits. First, it offers income through rents and leases, often at a rate that exceeds typical stock dividends. It's also a tangible asset that tends to appreciate over time. Real estate can be an inflation hedge, meaning its value often increases when inflation rises, preserving purchasing power. To access larger properties, many wealthy investors use real estate investment trusts, or ETs, or even pool funds with others through private real estate funds. Some also leverage real estate syndicates and investment partnerships to acquire larger, high-value properties. Private equity and venture capital, high risk, High-reward venture capital and private equity are two areas where the wealthy truly stand out from typical investors. These investments are higher risk but offer substantial returns if the businesses succeed. Venture capital, for example, allows billionaires to back startups and early-stage companies, often in sectors they are passionate about or have industry expertise in. Private equity involves buying significant ownership in established companies. This strategy typically requires large amounts of capital but offers the potential for high returns. Through private equity, investors might acquire companies, help restructure them, improve profitability, and sell them for a profit. It's a longer-term, hands-on investment that appeals to billionaires who want to control and grow companies rather than merely earning returns on passive holdings. Commodities and tangible assets, a hedge against market volatility. Another way the wealthy diversify their portfolio is through commodities and tangible assets like gold, silver, or even agricultural products. Billionaires often use these as a hedge against economic downturns or currency fluctuations. Precious metals, for instance, tend to hold value even when markets are volatile, making them an ideal safety net for uncertain times. In addition to metals, they may invest in natural resources or energy assets. For example, oil and gas investments provide exposure to energy markets and can serve as an income source through dividends. Some wealthy investors are also involved in renewable energy projects, from wind farms to solar energy, which not only supports their financial goals, but also aligns with environmental values. Art and collectibles, more than just a luxury. For the ultra-wealthy, investments go beyond conventional asset classes. Fine art, rare wines, luxury cars, and other collectibles are frequently found in billionaire portfolios. These items often appreciate in value over time and provide a physical store of wealth that can be passed down as generational assets. Art investments can be complex, but they offer significant potential returns and even tax benefits in some cases. They can also act as a hedge against inflation and market volatility, as the value of rare collectibles doesn't typically correlate with stock market performance. For many wealthy individuals, art and collectibles also offer a way to enjoy their wealth while building their investment portfolio. Hedge funds and alternative investments. One of the biggest differences between everyday investors and the top 1% is access to hedge funds and other alternative investments. Hedge funds are private investment partnerships that can employ aggressive strategies, such as short selling, leveraging, and arbitrage. Many hedge funds are only open to accredited investors, people who meet specific wealth and income criteria. These funds often aim for absolute returns, meaning they seek to make money regardless of market conditions, which appeals to high net worth investors. Hedge funds come with higher fees and higher risks, but can offer a greater potential for profit and portfolio growth, especially in volatile markets. Structured products and derivatives for advanced risk management. Derivatives and structured products are more complex financial instruments that billionaires often use to manage and hedge against risk. These products include options, futures, and various contracts that derive their value from underlying assets, such as stocks or bonds. While derivatives are sophisticated tools, they allow investors to lock in gains, protect against potential losses, and manage risk in a tailored manner. Through structured products, the wealthy can tailor investments to meet specific goals, whether it's income generation, capital appreciation, or market hedging. These instruments can offer high returns, but require expertise and careful management, which is why they're primarily utilized by those who have access to specialized financial advisors and trading resources. Globalization of wealth, investing across borders. Billionaires don't limit their investments to one country. Global diversification is key to protecting wealth, especially in uncertain economic times. High net worth individuals often invest across borders, placing funds in foreign stocks, bonds, real estate, and even businesses. Investing internationally allows the ultra-wealthy to spread out economic and geopolitical risks. By investing globally, they're less exposed to local market conditions, and they can capitalize on growth in emerging markets, where returns are often higher due to faster economic expansion. Now that we've covered a variety of billionaire investment strategies, it's clear that investing like the top 1% isn't just about having money. It's about adopting a disciplined approach to wealth building and preservation. From diversification and global investing to alternative assets and risk management, these principles can benefit investors at any level. Thank you for watching. If you enjoyed this breakdown of billionaire investment strategies, don't forget to like, subscribe, and share this video with others who want to learn about high net worth strategies. Until next time, happy investing.